Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. 3M Corporation reached a settlement of more than $10 billion dealing with PFAS. Now, in one way, this is good news because the company can start to move forward with some line of sight. A lot of investors are looking at it, trading for high single-digit price to earnings right now, thinking, hey, maybe this is time to buy 3M, especially when you look at the dividend yield. I'm Jason Hall. This is The Smattering. I got Tyler Crow here with me. And Tyler, for one, is not so convinced that now is the time to buy 3M. We're going to talk about why. And we're also going to talk about a stock that it might be a better company to buy. Hey, Tyler, how's it going?
Good, Jason. Before we even got in this video, we were looking at it, and 3M has a very high yield right now. It's north of 6%. And we were sitting around looking for high yield alternatives, and there's not a lot of high yield stock opportunities out there unless you really want to go deep value dumpster diving. So we can sympathize why people are looking at this and going, maybe this could work out.
Yeah, chances are, if you're looking at the blue chips, and there's no doubt that historically 3M has certainly been one of those blue chip stalwart bellwether businesses. It's grown the dividend every year for decades at this point. And you have to think, okay, this is the one that looks good because everything else is expensive. The yields are pushed down on all of them because investors are looking for safety. The issue with 3M is typically when nobody else is paying a high yield and you are, there's probably a bad reason why that's the case. Right, Tyler?
As you mentioned at the top, there was a major settlement related to perfluoroalkylate substances, PFAS, forever chemicals. The settlement that they did was for somewhere between 10 to $12 billion. They're going to take a $10.5 billion charge this coming quarter, and they're going to pay it out over the next 13 years. For a lot of people, they might say that gives us some certainty, right? We know that it's going to it has to pay this. Over 13 years, that seems somewhat manageable. And even though it is the 7th largest lawsuit in the history of corporate litigation, but this isn't it. For anybody who has been following the company for a little while, the thing that's important about this particular settlement is it's only related to municipal groundwater contamination and cleanup. So basically towns suing 3M for the cleanup costs associated with these chemicals. This does not cover personal injury litigation and liabilities that 3M may encounter in another separate class action lawsuit, because there have been some connections tied to these particular chemicals as a carcinogen. That's another potential lawsuit sitting out there. And then there's another lawsuit related to earplugs that they sold to the military that allegedly weren't effective enough. So you still have 2 outstanding litigation cases that do look significant. So you tie this together, and there's still a lot of litigation uncertainty related to 3M on top of this huge settlement that they just had to pay.
You put all that together, you look at the company, you look at the financial results, and I can tell you over the past 10 years, it's pretty consistently generated in excess of about $6 billion a year in operating cash flow. And of course, it's needed to use some of that for CapEx and other things. But the point is that it does appear on the surface that its ability to generate enough cash flow to support its dividend and also still support these obligations does look to be sufficient. But then you start talking about the things that you just did and these potential future uncertainties. And investors that are looking at the dividend should certainly tread lightly. I agree with you there. I will say that trading for between 9 and 10 times earnings, this is before the impact of this charge that they're about to take, does make the stock look like it's trading for a pretty reasonable valuation. And for some investors, you may decide that the risk is worth the potential reward. Okay, that's fine. But just to understand everything Tyler said is that there's some line of sight, but there's still a lot of uncertainty about potential future liability there. Tyler, what I'd like to do is I'd like to give the folks watching a stock as an alternative, not necessarily a competitor with 3M, but a company that benefits from some of the long-term tailwinds with global economic growth. And one that you and I came down on that we thought is really interesting right now is Air Products and Chemicals, ticker APD.
We were looking for that blue chip stability that you would expect from a long-term dividend payer. And we couldn't really find anything in the high yield that maybe people were looking for with something like 3M. But One thing that investors might be particularly impressed with is that even though Air Products has a lower yield, it has grown its dividend at a fantastic rate. And this is one of those particular businesses that it's never going to wow you. Industrial gases, absolutely necessary for just about any industrial process that you're going to do. Food processes, CO2 for the soda machine in restaurants and things like that. These just very simple things, but absolutely necessary to make the global economy go. And it is also a high barrier to entry business where it's more or less an oligopoly.
It's something along the lines of about 80% of the market is controlled by, I believe, 3 companies. So it is very highly consolidated. And as you said, there are those very high barriers to entry because the way these companies tend to structure, and Air Products is certainly this way, is they'll have a major industrial customer, say a steelmaker or some other manufacturer that needs these industrial gases for their manufacturing. They sign a long-term contract, a supply agreement with these companies, builds their facility within a very short across the street. And what that does is that provides them a very high level of stability for those assets in terms of guaranteed cash flows for an extended period of time. And then it allows them to market all of the surrounding customers, businesses that need these same industrial gases, but at much lower levels at very profitable rates that they can deploy these assets at. So it's a really attractive business model. And again, because of the barriers to entry, it doesn't make sense if Air Products works with the local steelmaker, you're not going to see Linde build a factory across town without an anchor customer that they're going to be supplying. So it's a tremendously strong business. And there are a lot of things to like about it. You're not going to find the same kind of yield with 3M, which again, we think the potential for a yield trap, but what you can get with a company like Air Products is that stability, that stalwart business, and wonderful dividend growth. Over the past 5 years, since the beginning of 2018, 3M's dividend has increased a whopping 10.3%, very paltry dividend growth for a 5.5-year period. Over that same period, Air Products has increased its dividend 84%. The yield may be low today, but if you don't need that income from the yield right now, and you're looking at a stock to hold for 10, 20, 30 years, their ability to generate excess free cash flow, grow it on a per share basis, and then grow that payout is very appealing. So to me, that's one of the things I think about Air Products that makes it a really compelling buy right now.